Hello learners, welcome to Commerce Diction. Today I will discuss a topic which is related to the basic concepts of accounting and which must be known as a commerce student, such as what is accounting and what is the difference between bookkeeping and accounting. Okay, so now let's begin. Question number 1. What is accounting? What is the difference between bookkeeping and accounting? So, accounting is an art of recording, classifying, and summarizing of business transactions in terms of money, the preparation of financial reports, the analysis and interpretation of these reports for the information and guidance of management. So, in accounting, we have to first identify the transactions, that whether it is a business transactions or not. Then we have to do recording of the transactions in journal and then classify it in the ledger and summarize it in trial balance and balance sheet. Okay. So, it involves recording, classifying, summarizing of business transactions, and the transactions must be measurable in terms of money. It means the transactions which cannot be measured in terms of money are not to be recorded. Okay. Suppose for example, an employee is performing well in a company, but it cannot be measured in terms of money. So, his performance is not to be recorded in the business because it is not measurable in quantitative terms. Okay. But if I say the company sold a car of rupees 4 lakh. Okay. Now this can be measured in terms of money, so it can be recorded in the business. Okay. And this recording helps in the preparation of financial reports through preparing the final account, that is trading and profit and loss account and balance sheet. Okay. Now from this financial report, the manager, or we can say the management, make analysis and interpretation of these reports through comparison, trend analysis and through ratio analysis. Okay, by calculating the percentage between the items of the balance sheet. Through use of this information, the management can make a quick decision for the business and it can help them in proper planning. Okay. Now next is your definition of accounting. According to American Institute of Certified Public Accountant, what is accounting? Financial accounting is the art of recording, classifying and summarizing in a significant manner in terms of money the transactions and events which are in part at least of financial character and interpreting the result thereof. It means, according to AICPA, the financial accounting is the art of recording. It means we have to first record it in the journal, then we have to classify it, then we have to summarize it in the trial balance and profit and loss account in a significant manner in terms of money. It means similarly the transactions which can be identified or which can be recorded in terms of money are to be recorded in business, and those which are not recorded in terms of money are not to be recorded, and there must be of financial nature. Okay. And interpreting the result thereof, it means after recording the business transactions, we have to identify, we have to interpret the results from the financial statement. How? By calculating the, or we can say by doing the statement of trading and profit and loss account, from where we can know whether the business is earning profit or loss, making loss, and by preparing the balance sheet, we can know the financial position of the business. If its assets are more than the liabilities, then the financial position of the business is sound, or we can say good, and if its liabilities are more than the assets, then it is unable to pay off the liabilities. So we can say the business has become insolvent or the business is unsound. Okay. So now is the difference between bookkeeping and accounting. Okay. So first point is meaning. Now it is concerned with recording, classifying and summarizing the business transactions. So bookkeeping only records and classifies those transactions and summarizes them in the trial balance, balance sheet and profit and loss account. Okay. But Accountancy is related with recording, classifying, summarizing, analyzing and interpreting the financial data. It means accounting includes both the bookkeeping part, that is recording, classifying and summarizing, as well as it includes analyzing and interpretation part, which is not included in bookkeeping. It means accountancy not only records the data, classifies them in the ledger or posts them in the ledger from the journal and summarizes them in the trial balance, but also analyzes and interpret the data through ratio analysis, cash flow statement and comparative balance sheet. Okay, so it involves analyzing and interpreting the financial data. Now your next point is stage. Bookkeeping is the primary stage in the accounting. It is the base for accounting because through bookkeeping we prepare the accounting data, which involves analysis as well as interpretation. So without bookkeeping we cannot do accountancy part. Okay, so bookkeeping is the primary stage in accounting. Apart from the primary stage, it includes the secondary stage of analysis and interpretation. It means accountancy not only includes the primary stage but also includes the analysis and interpretation. We can say that accountancy begins where bookkeeping ends. Okay, because it includes analysis and interpretation. Okay, now your next point is objective. The objective of bookkeeping is to keep record of the financial transaction in a proper chronological order and it has a limited scope. Okay, so objective of accounting has a limited scope because it only records the transactions and classifies and summarizes them and does not do the interpretation and analysis. Okay, so it has a limited scope and it must be recorded in a proper chronological order. Proper chronological means in a date wise orderly manner. Okay, so if the transaction has happened today, so it will be recorded on 11th November. The date must be given. So recording of the transactions in a date wise order is a chronological order, we can say. Okay, now but on the other hand, the objective of accounting is to prepare the financial statement and further communicate the information to various users like employees, debtors, creditors, government, investors, management, etc. It has a wider scope. So accounting includes the preparation of financial statement and it also includes analysis and interpretation of the accounting data. So it has a wider scope. Now this information from the financial statement, that is whether it has done the profit or loss, or we can say how its financial position, these information are communicated to the various users of the accounting data, which can be employees or it can be a debtor or it can be a creditor or management. Okay, now your next point is level of work in bookkeeping. It involves routine or clerical work and is done by lower level management. It means bookkeeping work is done by the lower level management because it involves routine or clerical work. Okay, such as recording, classifying, or we can say posting them in the ledger and balancing the accounts. All these are performed by the lower level management, but accounting is concerned with all levels of management because lower level work clerks prepare the accounts, medium level report it and top level interpret it. Okay, now what are the outcomes in the bookkeeping? It includes journal, ledger posting, balancing of accounts, preparation of trial balance, while accounting includes preparation of profit and loss account and balance sheet. Okay, now your next point is decision making. Management cannot take a decision based on the bookkeeping data, or we can say the data provided by bookkeeping, because it only includes the recording of the transactions and does not involve any analysis and interpretation of the data. So we cannot make the comparison or we cannot take any decision on the basis of this information. So on the other hand, managerial decision in the accounting, managerial decision can be taken through the use of accounting data, because here we make analysis and interpretation of the data. So the management can take the decision through the use of accounting data, or we can say through the use of the financial statement. Okay. Now your seventh point is skill and knowledge. The person who performs this job is known as bookkeeper, but on the other hand, in accounting, the person who performs this job is known as accountant. Okay. So we can say a bookkeeper is not required to have a higher level of knowledge and analytical skills, because he only records the data and does not make any type of analysis and interpretation of the data. So he does not require to have a higher level of knowledge as like an accountant. But in accounting, an accountant must have a professional knowledge to have, or you can say it must have a higher level of knowledge, such as a chartered accountant. He can do the analysis and interpretation of the financial statement. So without the degree of a chartered accountant, we cannot make analysis and interpretation of the financial data. So an accountant, we can say, must have a professional knowledge. Now next point is users. In bookkeeping, only internal users such as owners, managers and employees use bookkeeping information, while in accounting on the other hand, it has both internal and external users. In internal users, we can say the owners, managers and employees, while external users are like investors, government, or we can say creditors, debtors. So all these are the external users, or we can say the users of the accounting informations. Okay.